All right, everyone. Hey, hold on. Just give me a second. All right, I'm streaming. All right, hey, everyone. Hey, thanks for joining me. Mark here, Mark P. Markets. I want to welcome you. I am looking to be streaming every Monday again. So I know some of you will be excited about that. Just give me a second while I adjust the microphone and then we'll get to this, okay? So here, let me just jump into the chat so I can see what's going on. All right, so again, if you're new to the stream, here's how it works. First thing I'm going to run through is the economic calendar very quickly. Then we're going to take a look at Bitcoin, all right, some Bitcoin price action analysis and see what kind of setups are likely over the next couple of days. And then I'm going to answer all of your questions, whether it's about an altcoin or Bitcoin or a stock, okay? So now would be a good time to start sharing those questions. All right, I'm also simulcasting on TradingView. All right, so let's get this thing started, shall we? This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Let me take that slide off. All right, and you can see my chart next. There we go. Okay, hold on. There we go. All right. So here, all right. So real quick now. Oh, I'm so big now. Just wanted to mention something. If you're new to the stream, hey, welcome. My name is Mark P. Markets. I just explained how this is going to go. I just wanted to mention 8cap partners very quickly, okay? They have made this possible for me to stream every Monday. So if you're going to thank anyone, you should be thanking them. They are a reliable and regulated Forex and CFD broker. Okay, they're very competitive as far as their spreads go. If you're interested in a broker, check them out. You could check out the link in my signature over on TradingView or in the description portion of the YouTube page or whatever. Okay, so you know where to check there. Also, I am an affiliate, so I am compensated in a small way if you happen to open an account with 8cap partners. Again, if you have any questions, you know where to find me. You could send me an email or a private message. I'll be happy to answer them. But again, they are my sponsor and they're making this possible. They are a competitive broker and they are regulated. They have good spreads and a lot of products, okay? So let's get this thing going from there. That's what I have to say about that. All right, now, next thing is we're going to get into the economic calendar. Hold on, and let me get my chart up so you guys can see it because I'm sure you don't want to be seeing my big fat face. All right, so you should be able to see my chart of Bitcoin. If you don't see it, let me know. And by the way, people on TradingView, sometimes people have a hard time seeing me on there. If you don't see me on there, you don't see my chart, just please try refreshing the browser. That usually solves the problem. All right, first things first, economic calendar. By the way, a number of you saw my stream, my meeting from earlier. So like I said, I'm going to repeat a couple of things from that because not much has changed over the recent few hours. Economic calendar. There are only two things worth mentioning this week. Okay, number one, we have CPI, which I believe comes out on Wednesday. That's a U.S. number, inflationary number. I believe it's at 10:30 a.m. Eastern time. Make sure to double check on the time. But because of the context of this environment, it's a very important number to pay attention to because it can move markets if there are any surprises one way or the other. Okay, you're not trying to figure out which way. You're just being prepared for a range expansion. So that's CPI on Wednesday. On Thursday, we have retail sales, another U.S. number, which can affect things somewhat. Those are the only numbers worth mentioning. Everything else, yes, there are other reports this week from other parts of the world. You should definitely check out your economic calendar, especially if you're a Forex trader, just to be aware of some of these reports or people speaking, okay? So wanted to mention that. Now, let's move on to Bitcoin analysis here. For those of you that read my article on TradingView, pretty much the point of the article was that markets change, okay? And I don't pretend to be right or I don't pretend to have the market figured out like so many people do. Instead, what I do is I try to obtain an objective view of the market so that I can do one thing, and that's not make money like everyone wants to do. It's to manage risk, okay? That is my objective. If you're still all about making money and this and that other nonsense, that's a big obstacle you have to get over, okay? That's part of human nature. I can't help you with that. This game is about managing risk. So if you manage risk well, then a byproduct is positive outcome, right? Your account growing. So here's the point. In recent articles for trading on TradingView, I wrote about these lower highs. Okay, let me make the chart bigger so you guys can see what I'm talking about. By the way, if you have questions about stocks or whatever, now's a good time to start putting them in the channel. So lower high, right? Lower high. Now, these areas that I'm highlighting here also generated sell signals, which I wrote about. I also warned about these sell signals, and I said that the risk was high, okay, especially this one. All right. And when I warn about high risk, why was the risk so high? Because you were going into these support levels. Now, I've been looking for a test of 17K. We never got the test. I can't make the market do what I think it's going to do, right? I don't think the market either is going to agree with me at some point or it just does not. And I'm prepared to adjust. So we never got through that 18K. Okay, no problem. The sell signals that I had mentioned offered some potential profit, but the key to managing those type of swing trades is looking for the conflicting signal. And I talked about that. Those of you that follow me carefully, you know that I've talked about that. Okay, so it's not about being right or wrong. You're going to be wrong most of the time in the market. Markets are highly random. Okay, so at best, you're going to be at 50%. That means half the time you're going to be wrong. It's about how you manage being wrong. So I always talk about these conflicting signals. There was one right there. So if you had gotten short at 19.5, which was a recent scenario that I called out, break of 19.5, it was worth a few hundred points, right? Maybe a little less than 1,000. And then what do you get? You get a conflicting candle. So if you're short and you're looking for 17K, but instead you get this reversal candle followed by another little mini inside bar, that's a call to action. That means it's time to do something, not sit there and say, well, I'll just be patient and let the market go my way because I'm better than the market, right? That's what most people like to think. But when you get something like this, it's either tighten your stop, get out, right? Take a small loss. If you have a small gain, get out, because this is not what a short should look like, especially going into heavy support levels like this, okay? There's a high risk of this developing. So if you're short or you were short, the right thing to do is get out, take the loss, and don't get short again until there's a new sell signal. Now, as far as swing trades go, right, and that's the point of why I do this analysis. This thing was in a hurry, right? This is a short squeeze. It took out these resistance levels, okay? This is notable, right? But it's not notable on the big picture. It's notable on the small picture. So if you notice, right, these little mini resistance levels, these are minor. What's minor mean? It means they're relative to just this leg. Does that make sense? They're only relative to this leg and nothing more, which means the broader structure, which you can see on a weekly chart, where this high over here is meaningful, right? That hasn't been taken out yet. So the bigger picture has not changed. You're going to hear a lot of talk and you're going to hear a lot of hype, big mouths calling for 50K, 100K. Now is the time to get in because you're going to miss out. This is your only chance to get in. All that nonsense. Please, if you get sucked into emotional appeals, you don't belong in this game, or you should not expect to make any money anytime soon if you get sucked in or lured in on statements like that. Okay, because they're far from objective. So here's the thing. So we have the squeeze, and it's a notable change, but only relative to the short-term structure. So bigger picture, right, which is the larger, the weekly chart, is still bearish, even though this movement is bullish, right? And the S&P and the NASDAQ look exactly the same because there's a correlation. So this is what you need to pay attention to for the coming week. Again, it's not about why. People always ask why. Please, there's no room for logic in a random environment, right? This is a highly random environment. Please don't bring logic into this. It doesn't matter why. The question you should be asking is where? Where are we? And what is likely to happen here? We are back in the 22K to basically, you want to round it to 25K, you can round it. We're in the 22K to 25K resistance zone. Now, this market refuses. There's no tail on this candle. Obviously, there's no pulling back just yet. So even though we are in an area where selling activity is likely to appear, right, over the week, there is no reason to sell right now. There is no setup here, okay? So you don't want to step in front of this. If the market turns, or if the market squeezes a little further than everyone thinks, right, and works its way back up to here, it can be very painful if you short it too early. So here's the idea. If you're looking for shorts, it's too early. You're in the right location, but there's no setup. So over the next couple of days, because it can take a day or so for the setup to develop and actually, become into play, to confirm, you're looking for this area here, right? Somewhere between 22 and 24K. You're looking for a bearish pin bar, inside bar. You're looking for something. You're looking for a previous day's low to get taken out. And when you have that, then you have a new sell signal in effect. Okay, waiting for that confirmation is a very good idea because it can save you a lot of money in case this thing keeps going, because that's also a possibility. It's just a lower possibility because it's fighting against the environment. Okay, I haven't talked much about the environment or context here, but not much has changed in the economic environment. There may be some changes trying to unfold, but we're far from anything confirmed. And at this point, we would still be fighting the Fed. All right. So as long as that dollar stays strong and bonds keep going where they're going, this is not likely to go very far, even though a 25K test is within reason. So how do you play this from the long side then for people that are interested in longs? Well, buying it now would be a bad idea as well, because you're in this resistance zone. There's a good chance that this thing is going to turn, okay? So there is the way to play the long side. Again, we're talking about swing trades here, not day trades. Don't confuse the two. In markets like this, where they're vertical like this, there's plenty of opportunity for day trades, okay? But day trades, you're looking for small bites, and your risk is going to be relatively smaller. As far as day trade longs, this thing needs to pull back, okay, if you want a better probability. Or at least a continuation pattern, an inside bar, and then that breaks. We don't have either one. But the more conservative thing to do here is wait for a pullback. That pullback can be back into the 20K area, maybe 19K area. Somewhere in this zone would be an ideal area for a pullback. Again, this can take a few days to unfold. That pullback followed by some sort of reversal and confirmation. That's what you should be looking for. Okay, you should be taking notes, and that's what you should be looking for. Until those scenarios develop, there's nothing to do unless you like playing the random game. Okay, you want to flip a coin, you get the same result. People don't understand why they make money. It's because you're playing the random game. And if you don't embrace random, and if you think that you can actually forecast a market accurately, you're only fooling yourself. Okay, you can't beat an efficient market, especially by conventional means. So that's Bitcoin. What I just described here is also likely to affect altcoins that mostly follow Bitcoin. Not all, because some altcoins have a lot of hype behind them and chat rooms and nonsense that, they're able to stimulate a herd mentality beyond the power of Bitcoin. But, that's where we're at. Now, other people, I've gotten some questions about some things that are just completely unnecessary and complex. Don't overthink this game, please. If you accept the chart, if you're using a chart, that means you're accepting that price accounts for all the known information in the world. That's why a chart offers any value to begin with. Otherwise, if that wasn't true, charts would be completely useless, okay? But they do offer some value because they're factoring in all the known information, which is impossible for you to know unless you have inside information. Then you have something on the market. But unless you do, which, and if you had inside information, you wouldn't be here listening to me. All right. Anyway, so let's move on here. That's Bitcoin. Let me know if you have any questions about it. And let me see what kind of questions I have about other markets. Okay. I'm going to start over here with TradingView. All right. Okay, cool. Hey, good to see you, Nader. All right. Hey, Joel, good to see you. Freeloader. The CPI numbers come out tomorrow. I'm sorry. I said Wednesday. Thank you for correcting me. I knew it was on the calendar somewhere. I got the day wrong. Make sure he checked the calendar. Make sure you check the calendar. CPI is tomorrow, and I guess Wednesday must be retail sales, I'm guessing. I just mixed up the days there a little bit. Thank you for correcting me. Okay, small back. Oh, for Greece. Oh, cool. Welcome. All right. G. Simone, hey, good to see you. Thanks for the explanation of what minor resistance is. That's relative to the most recent. Right. Okay. Right. Well, it's all about proportions, right? Okay, cool. Freeloader, silver. I know it follows gold, but it's been okay. Silver. You want me to take a look at silver? All right. I'll take a look at silver, and then I'm going to jump over to the YouTube chat, see what you guys have to say over there. All right. So silver, XAGUSD. Yeah. So of course you know it follows gold. Interesting move, right? So, silver, there's a lot of conspiracy theories with gold and silver, but that is certainly interesting and not exactly the same as gold. Let's take a look at gold here. Gold kind of looks, like I was talking about this earlier, actually, gold looks relatively weak. Okay. Silver, XAGUSD, that's an interesting chart. And it came off of, look at these lines I have. These lines have been on my chart for a long time. Okay. I mean, going back quite a long time. And it's interesting, that's where the reversal occurred, right? Failed low situation. So silver may have some of its own factors driving it. I don't know. This is the first time I see the silver chart because I don't really watch silver very closely. So thank you for pointing that out. So here's the thing. This is the failed low, okay? So obviously the move is in play now. You can't buy this thing now. You can't chase it. If you've been accumulating silver all along, great. I mean, what's the price of silver right now? 1977. Okay, so it's just a short squeeze. It looks like, but it's still, you're still fighting the Fed and the strong dollar. So I wouldn't really make a big deal out of this. If you have a short-term position on, like a CFD or something, this would be a great time to take profits. Okay, because look where you are. You're right back into this old support, which is likely to act as a new resistance now. Look at this area right here on silver. Look at this. It's going to be a zone. It's not going to be an exact number. So between 2084 and like, what is this? What is this low here? 19 and a half, right? You have a zone in here. So that's a place to be taking profits. Now, again, if you have a short-term instrument, if you're long, if you have like a long-term instrument, maybe it's a silver stock, a miner, or maybe you have physical metal, there's not much, you're not going to go to your metals guy and dump silver on them now. It's kind of senseless to do that, right? Especially with the way the premiums work on those things. This is a short-term move. So let's take a look at a weekly chart on silver real quick. I mean, look, it's an interesting move, but it doesn't change the trend on the bigger picture just yet, right? I would still be generally bearish on silver. And like I said, if you have a short-term product, good time to take something off the table. Not a good time to be buying more silver. Wait for the lows. Again, the dollar needs to change its trend if you're going to see this thing do something spectacular. Unless there's some kind of special thing going on with silver, but I'm not a big believer in the conspiracy theories. They've been saying that stuff for 10 years, that silver is going to be at 200. It's still not there yet. All right. Anyway, thanks for pointing that out. Good thing to keep an eye on, especially for people that hold on to physical metal. All right, let me see what else. Let's see what we have in the YouTube chat here. Okay, so all right, no dollar index. Tillin, all right, from Slovenia. Oh, one of my longest followers is from Slovenia. Okay, and BTC refusing to give in, pushing me. Okay, no reason to fear of missing out. Like I just said, please don't get caught up in that nonsense. You have to look at the bigger picture economically, okay? And I'm going to bring this up real quick. US, what is it? US 10. Let me get the bond market here. ZN1, right? This is what you need to pay attention to before you get all excited about Bitcoin, right? This is the bond market. This is the bond futures. And there's nothing bullish going on here. All right. Look at today's candle. Like they tried to buy this thing, right? So at one point, this candle was green, and now look, it's a bearish pin bar. This thing is going to break supports. That's what it looks like. It's poised to break a support and work its way lower. As long as the bond market looks like this, Bitcoin is not going anywhere. George, how can you say that? Because interest rates rising are not good for anything that is highly speculative. Bitcoin is highly speculative, along with all of its garbage altcoins. So as long as we don't have an easy monetary environment, and this is not a reflection of easy, the Bitcoin rally is not likely to go anywhere. So it would be wise to just stay on your dollar cost averaging strategy, taking your small bites. There's nothing wrong with small bites and accumulating small. If Bitcoin happens to go to 15K, you'll be happy I said that. Okay. Bitcoin is not likely to go anywhere, maybe 25K. If you get excited and you want to feel like you're taking advantage of this great rally that's about to develop, whatever, perhaps you can buy yourself just a little bit more than you usually buy. But there's no reason to change here. Okay. If the bonds were telling us another story, I would be more open to the idea of averaging in with at least larger size or maybe a little bit more frequently. Okay. Does that make sense? So thanks for asking. Again, don't get caught up in the nonsense out there. People are quick to say, oh, 50K, oh, 100K off of like one or two candles. And they don't pay any attention or they don't care to pay any attention to any of the factors that matter. Because again, they're usually trying to sell something or they're just trying to get your attention and they're trying to stimulate some type of action, right? It's usually buy something from them. All right, let's say, hey, X, how do you think the Ethereum merge will affect the market this week? Wouldn't be a surprise to see. Okay, well, look, all right, so X, I have no opinions, and I don't get caught up in anything complex like that. We'll see what the price tells us, right? Because I certainly don't know more than the market, and we'll see how it behaves. Bitcoin is in a location where selling activity is likely to develop. Perhaps that could be a catalyst. That's the best we can do. Okay, so either Bitcoin turns at that location or it does not turn and works its way higher, right? There's no way to know how it's going to behave in advance, especially when there's no confirmation. All we have is a level. That's all we have. So it's not a good idea to step in front of it. If you step in front of that with an opinion and you say, you say here, it wouldn't be a surprise to see, right? If you step in front of that with like some kind of opinion like that, you can get yourself into a lot of trouble. Okay, no opinions. The market doesn't like opinions, right? The market opinions are usually very expensive, right? It maybe once in a while you win, but not a good idea, okay? Because you don't know more than the market. Hey, Bill, Lagius, all right. Hi, dollar, euro. Okay, so I guess you mean euro dollar, right? I'm not going to look at dollar euro. We'll look at euro dollar. Now, here's the thing. I talked about this earlier as well for followers. This thing right here is, look at this, right? Look at the location. So general structure on the euro is bearish. Look at the weekly chart, right? There's nothing bullish about this, nothing, right? It's the inverse. It's the inverse of the US dollar. Look at that, right? That's the weekly. The dollar is the inverse of this. So the dollar, everyone thinks, oh, dollar pulling back. It doesn't mean we have a trend reversal. We don't have a Fed that's supporting a dollar trend reversal either. They're still hawkish. There's nothing changing, okay? So until we see some changes there, sure, we can argue that the market prices in things in advance before like the Fed behaves, before the Fed reacts. That's possible, but there's just nothing. There's nothing to go by right now, okay? So here's the thing. If that's the case, then I have to anticipate that this general trend is still intact. For the euro, we need to take out this number here, okay, which is what, 103.68. So basically, euro needs to start pushing into the 104s before we can even start to entertain the idea that there's any type of trend change, right? So with that being said, I'd be looking for shorts. And the euro is something that I would be very happy to short if I can get that opportunity. And we are in a location where selling activity is likely to develop. This is an old support, new resistance. And look at today's candle. This is when Jerry Seinfeld comes back in. Look at today's candle, right? That's a bearish pin bar. Now, the candle will still open, but we close like that and we take out this low tomorrow after this close, that's a new sell signal off of a resistance area. So that would be a qualified swing trade short. And, your stop would go up here somewhere. And then you'd be looking for the test of low, okay, over the following week. Now, it doesn't mean that a new low is guaranteed, although the structure favors a lower low, meaning going below 98 cents. It favors that, but you can't go into it with the thought that, oh, yeah, it's going to go there. You cannot go in there with an absolute thought. You watch this thing. If you're short, right, after the signal. If you can get more than what you risked, you've done your job. So typical risk on the euro is usually 80 to 100 pips. You really shouldn't be going more than that on a swing trade. If you can get more than 100 pips on the swing trade, 120, 150, that's a great trade, okay? If you are feeling aggressive at that point and you want to give it a chance to make the lower low, you can do that as well, okay? Because you're on the side of the market at that point, okay? Makes sense? So that is the euro. All right, let me just see what's going on over here. All right, good question. Let me jump over to the other chat. So that's euro against dollar, which everything I just described would be inverse for dollar against euro. Or you could just look at the dollar index. All right, let me see here. Let me go back to TradingView. All right, cool. So by the way, I'm doing only this for an hour. So if I missed your question, I apologize. That's what I forgot to mention. I'm going to cut this off at an hour. I usually go over, but I have to stop doing that. So 1 hour and I'm cutting off. If I miss your question again, I apologize. Come back next time and ask me again. Okay, so let me see. Thanks. Okay, I'm just going through the chat here. Silver. So Joel says there's a lot of talk about silver squeezes. Can you look at PSLV and look from TA perspective if there's a setup? Okay, so I just answered that question with silver itself. I mean, what is PSLV? I guess is that some kind of other instrument? PSLV, Physical Silver Trust. Okay, yeah, all right. So this is going to be one of those like charts that are very like they have like too much space all over the place in them. Right? I don't like charts that look like this, but basically you're following the silver instrument, the silver, spot silver. That's basically what you're looking for here. These are your levels, right, on this thing, which are going to be relative to the spot price. So right now, right, there's no reason to be chasing this thing. Like I said before, if you're in it and you want to take some profits on a short-term instrument, there you go. This is the resistance you're looking for. And this on this thing, it'd be around $7, $7.25 area, right? If it goes beyond that, then maybe something is going on. Maybe something is changing. But until then, I mean, I don't know. I'm not going to be convinced, especially with the way the dollar looks. Okay, so anyway, thanks for bringing that up. Again, some more on silver. No new thoughts on Ethereum outperforming ETC. Oh, okay. Again, listen. No. Again, too much complexity. If Ethereum eventually outperforms, hey, that's what it wants to do. I don't question it. I don't try to figure out why, because there's no way to know. Here, let's just take a look at Ethereum real quick. Ethereum is, what is this? So look at this. This is Ethereum. It's Bitcoin hasn't even turned yet, and this is what Ethereum is showing us. And you're talking about Ethereum outperforming? I don't know. You're right there. And look, man, stick to levels, right? Resistance level. I see selling activity. This is what should occur at a resistance level. That's all I look at. All right. General structure here is somewhat bullish, but these individual coins are not the leaders of the industry. Maybe at some point Ethereum will become the leader. Okay. But until I see clear proof of that, I will suspect that Bitcoin is the leader, just like the S&P is the leader, and Bitcoin leads. So I don't care how great Ethereum looks. If Bitcoin sucks, Ethereum is going to go in the toilet too. That is how this works. Okay. I go by those relationships until I see them change. I don't overcomplicate things. Okay. Next. Good question. Golden. Nico. Hey, Nico. All right, cool. Thanks for stopping by. All right. Hey, Swen. NAS 100. All right. Let's take a look at the NASDAQ. NSX USD. Not too many people ask me about this. Now look at this. This is going to have a lot of people fooled as well. Why do I say that? Well, look, here's the thing. First, you want to look at other levels, right? General structure and general trend are bearish, generally, right? This is the weekly, right? Weekly chart. There's nothing exactly bullish yet. We may have a change occurring right here, but it's still too early to make that judgment. We have this resistance. What is that? 13.5 area, right? That resistance is a general lower high. Okay. I don't care that it's higher than this one. It's still lower than this one. And this is the broader structure. So that's a lower high. This thing could still set up and make another lower high, right? A mini one relative to this bearish structure here. Does that make sense? So structure is still bearish, even though we're getting some bullish activity now, in light of an economic environment that is not supportive. So I view this as a bear market rally and really nothing more than that. Yes, they are confusing because people always think that in bear markets, prices just can't go higher, but they can. All right. So as long as these structures stay in place, like price cannot take out that high, I would be suspecting the S&P and the NASDAQ to develop a lower high somewhere. Now, can I be wrong? Of course I could be wrong. I don't pretend to be smarter than the market like so many other fake gurus like to do. But I can reasonably anticipate an area where selling activity is likely to appear again. And either the market will confirm this idea or the market will not. Okay. And that is what allows me to measure risk and make an objective decision whether I want to short this thing or not. I'm not thinking long. And the reason why I say, oh, that's an opinion. It might be an opinion, but also the risk is very high here for longs. All right. So in such an area, right, and it's this whole zone. And I may spend a little time on this, but you can learn a lot from this lesson, not just about the NASDAQ. This applies to any chart that looks like this, right? And Bitcoin too. So this zone is going to be a place to be looking for selling activity. Some news can come out of nowhere, right? CPI report, retail sales, some other unexpected news. And next thing you know, right, you get one of these candles out of nowhere. Anyone remember what this candle was? This was the Jackson Hole Symposium. That's what that was, okay? And before that symposium, everything was, going into it. Yeah, right, market's okay. Everything is okay. Not quite, okay? So anything can come out and turn this thing around. That's what the environment favors. So I would be open to shorting the NASDAQ or shorting the S&P if a signal developed in this zone and it confirmed. Okay, a good way to do that, by the way, is with options, all right? Because options allow you to take risks, like more aggressive risks, without getting yourself into trouble, right? Or causing problems for your account. I'm not going to get into options right now. I'm not going to talk about all that, but in a situation like this, I would be looking to option combinations, like a vertical spread to take advantage of something like that. Now, at this moment, there's no reason to do anything. There's no setup here. All we have is a price is pushing into a potential area where resistance is likely to develop and selling activity is likely to accumulate. Does that make sense? So until I see the confirmation, and that's something that could develop this week, right? There's nothing to do here. No reason to be going long here for swing trades. And what this also means is stocks. If you're following tech stocks, stupid stocks like Apple, I call them stupid because they all look like this, right? They don't trade on their own. They're basically are just a variation of this. Apple is the NASDAQ basically, right? So if this thing turns, all your favorite stocks are turning as well. All right. So it's not a time to be going aggressive long thinking you've missed the bottom and we're going into Santa rally, which is, you may hear some talk of that, right, at this time of year. It's way too early to think anything like that. All right. So I hope that helps. Look at levels and look at price action around those levels. I would be looking for shorts. There's just nothing there yet. All right. Good question. NASDAQ 100. Let's move along here. I want to get some more before I have to wrap this thing up. All right. Hold on. Let me jump over to the other chat. All right, so hey, Ryan, good to see you from France. Okay, welcome. What do you think of pound dollar? Okay, so you guys keep talking about the dollar, right? GBP USD. So this is, again, reaction to the dollar. The pound looks like complete garbage. Look at this. Look at this. This is like an altcoin over here, right? This is like Litecoin over here. I'm joking, but I mean, look at that chart, right? This is a weekly chart. Lower highs, lower lows all over the place. So we have a bounce, yes. We have a bounce off of a support level. What a coincidence. But this is not a place to be going long. All right. You should be looking for shorts. The aggressive long, which occurred on this pin bar. Okay. That would have been a counter trend aggressive. Sure. We can see that after the fact. But what do you do now? Do you chase this thing? I wouldn't be. I would be looking for shorts. Okay. On the pound, just like the euro in this area right here. And that area happens to be 117.16. So basically 117s, 118s. This thing can squeeze. Keep in mind, it can squeeze up until here, okay, before anything gets bearish again. So keep that in mind. Also, watch the dollar index. All right, you guys keep bringing up these forex pairs. Let's take a look at the dollar index. This is the dollar index. Does this look bearish to you at all? I hope you say no, because if you say, "Oh, yeah, it's bearish," look, that's bearish. That's just a pullback within a broader bullish trend. There's nothing bearish about this thing. Okay, not yet anyway. So we have this support here on the dollar. There's a pin bar in progress of developing right now. So someone's stepping into that. Okay, there is some buying activity there at the moment. How this candle closes, we have to see. If the high of this candle is taken out, that becomes a new buy signal in the dollar. Now, keep something in mind. A lot of these buy signals are not simple, meaning, like, look at this over here, right? That was a buy signal, and then it fumbled around for a few weeks, okay, before the next leg really came about. So don't be in a hurry with these things, okay? If you get like a single buy signal here, okay, that may go somewhere, but just understand that the more reliable signal is after the consolidation, okay? And so I would prefer to see a consolidation, not like a one-off where it just goes. Although it's possible, how you manage that is going to depend on your risk tolerance, right? And what you're comfortable with. Another thing you can do is if you get the one-off, meaning you get the pin bar and it goes, perhaps a smaller position, because this thing is likely to fumble like this, fumble around, you know, before you get that leg. I mean, the dollar tends to do that kind of stuff. I mean, look how many times it's done something like that, right? It tries to give you a buy signal, and then it goes into these little consolidations, right? So you just have to be careful of that. Be aware of that. You may get stopped out of a position. You have to be prepared to get back in, okay? I mean, when we're looking at it after the fact, it's easy to say, oh, yeah, look, yeah, sure, I would have gotten back in right here. Right, well, it's not so easy when it's occurring. So, you know, if you took a long over here, you may have gotten stopped out, right? You have to recognize that the trend hasn't changed and that the next long signal, especially something like this, a failed low with a pin bar, I mean, that's a long signal, okay? So I'd be looking for a similar behavior on this thing until supports start clearly breaking, okay? This is a minor support up here. What is that, 108, 108 and a half, and that hasn't even broken yet, okay? This is a major support over here. What is that, 104s, 10, and that's we're nowhere near it. So until we take out like those 104s, which would probably in the equivalent on the euro of like 103, I would still be bearish on things like the pound and the euro, and bullish on things that trade with the dollar. Does that make sense? Not against the dollar. Okay, next. Good question. I hope that answers your question. Let me jump over to the other chat. RECSI, what is that? Silicon stock. Okay, let's see. RECSI. Okay. Oh, it's a Euronext. That must be it. Okay, let's take a look. So I guess it's a silicon in there. I guess it's a semiconductor, I'm guessing. I don't know. I don't know what they do. But okay. Now, this is a euro stock, right? Stocks that trade, you know, in the euro markets may be seeing a lot of bullishness. Why? Because the currency is going in the toilet, just like the Turkish lira was, right? The Turkish lira was going into the toilet, and the Turkish stock market was looking really strong. It wasn't strength, it was the lira was worthless, okay? So you may have something like that going on here, which is basically inflation. But as far from a technical point of view with this chart, you have a consolidation, a generally bullish consolidation. This is a weekly chart. So with something like this, okay, you're near the highs of the range. If you're looking for longs in this, this is probably not the best location for longs. All right, let's take a look at a smaller time frame here. So look at this. It tried to pull back. It tried to find support. And then you have this candle. Okay, that is not the candle that you should be seeing if you got long on this bullish. You know, if you took the bullish signal, you have to be prepared for what can go wrong, or the, you know, the conflicting signal. Bearish pin bar followed by this. Don't want to see that. So if you're long, that's a call to action to make an adjustment, right? And I don't see, there was really no reason to short this thing. So I don't know if you're short. If you're short, you just let this thing ride, okay, and see if it breaks the support. That's what you're looking for. And with that lower high, I would be anticipating a support break. But just keep in mind, you have all this old resistance back here, right? And that's where that support went into effect. This thing may just pull back slightly, right, and give you a failed low. A move like this does not guarantee a trend reversal. Keep that in mind, right? This broader trend is still generally bullish, and this thing is in a consolidation, right? Consolidations are typically trend continuation patterns. So I can't argue for a bearish trend here. So if it breaks this support, then just look for the range lows, okay, as far as the next potential swing trade opportunity for longs, right? This is your range low. You have this area here, you have this area here. All right, so you're looking at the what, 1493 area, right? 15 and a quarter area. That's one area. The other area is like in the 13s, maybe 12s if it gets a little extreme, right? Those would be possibilities for longs, right? If you get the reversal there on those supports. Again, I don't know how the euro, I mean, the euro had that pop, right? So maybe that's what this is being affected by. I don't know. But if the euro continues lower, I wouldn't be surprised to see this thing develop that buy signal, right? Maybe the euro can be a good gauge. All right. Anyway, good question. Let's move along here. DXY. Okay, so I went over the dollar index, went over it, so I beat you to it. Okay, hey, Milad, from Manhattan. Oh, wow. Hey, I can almost see you from over here. You guys are usually watching Jim Cramer over there. You guys don't watch me. I appreciate it. Thanks for watching. All right, what do you think about housing market? Home builders index shows warning to similar. Okay, look, housing market, I'm not a housing expert, okay? But all I can tell you is bond market. That's all I can tell you. Rising rates and a Fed that is not helping out, okay? The Fed is not interested in easy monetary policy. So with rates continuing to rise and a very hawkish Fed, I would suspect housing is going to suffer because it's going to be harder to borrow money, right? The cost of money is going to be higher. That's the way it looks. And that bond market seems to have no intention of turning around, right? That's what you have to watch. So even though I'm not a housing expert, there is something to the cost of money and housing. There is a relationship there. So I would be looking more at that. So that would be my answer to that. I would be pricing in lower housing prices as long as the bonds look like that. Of course, housing is very dependent on location as well, right? Because there's greater demand for some locations compared to others, right? So a place like Manhattan, I mean, you've had ridiculous inflation and valuations there for quite a long time. I'm familiar with Manhattan. So especially parts of New Jersey as well, ridiculous, right? In all areas around New York City. So rising rates should have some of, I would think, adverse effect, but I don't think you're going to see anything exaggerated like in some other parts of the country where, you know, prices really feel the pain because they don't have the same demand as they do in a place like here. Okay. I mean, maybe things change. A lot of the reason why people stay here is because this is where there's a lot of work here. But now because people can, you know, work from their computer, maybe that changes things. I don't know. Anyway, good thing to research. Thanks for asking. All right. Okay, no problem. Yeah, silver. Silver's interesting. We got all the silver people. To buy a U.S. Mint issued American Silver Eagle, it's pretty much about $35. Wow. Okay. That's interesting. All right. Well, those premiums are probably going to be inflated as well. But like I said, don't get overexcited. Now is not the time to load the boat on silver. Okay. If anything, wait for the pullback because you're still fighting the Fed. All right. Anyway, thanks for mentioning. Let me see what else I get in you. Hey, Kai, how are you? All right. Yeah. All right. Peter, hey, good to see you. David, good to see you. David from Miami. Toby, okay. Toby, I don't know if I pronounced your name right. What's your take on Bitcoin tapping into 2720 kind area? Okay. Good question, right? What's my take on BTC tapping into 2729? That means about 28K. We need to clear 25K, right? That's the way I look at that. So here, hold on a second. I just messed this up. Let me go back to the comments. All right. So let's take a look. Let's go back to Bitcoin. So that level up in those 28Ks, right? 28K was a pretty significant level, right? That's this area over here, okay? And that's going to be the next resistance, basically 28 to 30. So before we even think about that, we need to clear 25. If we can't clear 25, there's no point in even talking about 28 to 30, okay? So right now I'm focused on 25, right? So anyway, basically 23, 24, 25, that zone I want to see if a sell signal develops. If it does, I want to see how far that thing sells off. By the way, I don't short Bitcoin. Okay, I'm open to calling shorts for other people, but I don't personally short Bitcoin. I short, there's other markets, right? Euro, NASDAQ, plenty of other things to short. I don't need to short Bitcoin. Now, so I want to see how that behaves until the market can prove to me that it can clear a significant resistance like this level right here. Until it proves that, I don't waste my time with 28K to 30K. People that get all wrapped up with that are just wasting their time at this point because there's no evidence, okay? If we pull back and develop a higher low and a new buy signal, then I will be open to the idea of breaking 25K, okay? But we don't even have that right now. All we're doing is testing it. We're getting into the zone for the first time in some time, and we're doing it in an environment that's not exactly facilitative of continuation, right? You can't lose track of the bond market, okay? So until I see changes there, anything that's driving this right now is temporary, okay? And that's how I'll view it until I see those other changes. The market needs to prove itself. All right, hey, Wedge, yes, right, Bill, there's always another opportunity. There's no reason to there should be no fear of missing out. That's just retail nonsense. You're watching too much TV. You're watching too much news. You're listening to too many fake gurus whose agenda is to stimulate activity. Understand that this is the most deceptive game in the world, okay? Most people, oh yeah, I'm here to help you because I like helping people and all this other nonsense. It's nonsense, okay? Real opportunities are not advertised, okay? Most of you, I'm sure, know that. You're not going to find an opportunity on YouTube and blah, 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 blah. Opportunities are usually not obvious, okay? Like, for example, something like this, buying this right here, yeah, after the fact, we can see that that was a nice buying opportunity, but very hard to take that, okay? Could I have, looking back, right, forget this, that we can see this after the fact. At this time, could I have called a buy signal? I could have, but how would I have adjusted for the risk? Because it's still, again, it would be counter trend, right? There's no way to know if this thing's going to run like this after that buy signal. We can only go by the structure, right, that the market is giving us at the time. So is it an opportunity? Yes, but it's high risk. So the question is, when you see something like this, are you willing to take the risk? And if you are, then you're opening yourself up to this type of opportunity. But keep in mind, it can also go the wrong way on you. Okay. So again, we see this after the fact. Oh yeah, this would have been easy. No, this could have went the wrong way. I mean, look at this. This is the same situation right here. Could have argued for that and gone long, blah, blah, blah. And then you're facing a sell signal at 19.5. Would you have gotten out? A lot of people would have banged it out or got stopped out, right? That's the same thing. That can happen multiple times. Understand, markets are random, okay? And opportunities are hard to find, but they exist. All right, anyway, next question. Okay, I keep talking too much. Daryl, thoughts on NASDAQ versus the Russell? Okay, so here's an interesting question. Thoughts on NASDAQ versus the Russell as being the better short if the CPI comes out and we get a short reversal? Okay, that's a good question. Russell are the small caps, right? The growth stocks. So I would guess that if we have a high inflationary number, that's again just going to give a stronger argument to the Fed. Growth stocks should suffer the most, right? So I would imagine that the Russell, okay, US 2000, the Russell should be a better choice as far as a more aggressive, a more likely short, because these things are going to suffer the most, okay? The growth stocks. So tech stocks and growth stocks, they're pretty much moving together. This looks very similar to the NASDAQ chart, does it not? So it's just really it becomes a matter of personal preference. If that CPI comes out too high, both of them are going to suffer. Which one more? I don't know. They look pretty much the same to me. Okay. But theoretically, the Russell should suffer more. Okay. Small caps, they particularly need to borrow a lot of money. Okay. So good question. All right. Euro SEC. Okay. Hold on. All right. Hold on. do you use Forex? What? I don't know. That sounds like a, no, I don't use that. And it sounds like you're advertising something. Okay, let me see here. Premiums are absolutely nuts for Eagles. Okay, Silver, that's Silver Talk. Hi, beginner, intermediate. Oh, okay, here's an interesting question. What beginner, intermediate technical analysis books would I suggest? There's a book, and I can't remember the name of it. I used to recommend the book all the time. I just can't remember the name. I think it's called Technical Analysis for Market Technicians. It's a hardcover textbook. I can't remember the authors. I don't know. Maybe you can email me about that and I'll find it. But that's a pretty good book. I mean, it's not exactly an exciting read. It was a book that I had to read for my CMT, and I found that to be one of the better books that I've read about technical analysis. Very practical. Oh, thanks, JW. Yeah, thanks. Well, okay, I can't. Since I'm on TradingView here, I have to follow house rules. Otherwise, I'd say more about that. What about getting into when you hit support after consolidation and setting tight stops for? Okay, so Miami, as far as when you hit a support, that's basically you're asking, what about stepping in front of something at a level? As my students know, I'm very against stepping in front. You can do that with options. It allows you more flexibility to do something like that. But if you step in front without confirmation, I mean, you can play that game and put a tight stop, but you're going to get stopped out a lot. In fact, you're probably going to get stopped out 50% of the time because it's random. Okay. So if you want to play that game, that's up to you. I'd rather wait for confirmation. And yeah, I don't get the best price, but I also don't get stopped out as much, right? That the idea is to get stopped out less than 50% of the time. So good question. Okay, a couple more, and then I'm going to wrap this up. So Euro SEC. All right, let's see. I have some time. Kai, Euro SEC. So let's see what's going on here. Oh, it's interesting. Some of these Forex pairs, they can offer some interesting opportunities, especially when they get into these ranges, right? Like this is nice. This is a weekly chart of Euro SEC. Look at that. That's a resistance, clear cut, right? That's a clear range resistance. You have a consolidation taking place here. So this can give you, at least for swing trades, a temporary swing trade opportunity on the short side, right? I would imagine the euro is going to have to go lower for this to work out. And the bearish move is in play. Let's take a look at the smaller time frame here. So if you're not short, I mean, you'd kind of be chasing it now because a higher low may develop here, even though there's no, the broader trend is very mixed. So you can either look for a short up in here, right, or another failed high or something, or perhaps you get a trend continuation pattern, or I should say momentum continuation pattern in the form of an inside bar, okay? Like inside bar develops over here, something like that, takes out the low, and you have your next sell signal, okay? In situations like this, you're targeting perhaps like the midpoint of the range. That's a very highly random area. Good place to take profits if you're short from the top of the range. Okay, if you're very aggressive and you want to try to give it a chance for a move to the bottom of the range, I mean, your chances are much lower, but that's going to depend on your risk tolerance and how aggressive you want to be. All right, good question. All right, LUNC Oh, that still exists? Okay, let's see. USDT. I don't know. I don't. Oh, look at that. Interesting. So look, the hype. That the nonsense never stops in these things, right? Look at this. So this is hype, okay? Whatever got this thing going, got it going. Now, like I said before, not all coins follow Bitcoin. When they can get their own hype machine going, this is what you see, okay? This is the herd mentality expressed in price. Now, you have this pullback developing here. This is interesting. So what you're looking for is a test of, what is this, 00030, this area. So this area right here, it's trying to get there. You're looking for a higher low to develop in that area if it can, but you are fighting this little mini lower high, okay? So in a situation like this, if you're looking to go long, something like this, I think it's wise to try to wait for some sort of failed low or some sort of consolidation in this area to prove that it's not going to just keep going lower, okay? Keep in mind, I'm not a big fan of these for swing trades. These are typically better for just long term. You buy and you hold and you wait for the hype machine to come along, right? I mean, look at all this. There's no trade going on, all this, and then out of nowhere, hype machine. Okay, and then you sell into that when you get the hype machine. So now, if the hype machine is over and this thing's going to go back in the toilet, you don't want to get caught in that, because as you've seen in many of these coins, they go to some ridiculous number and then they give it all back, right? That's typical altcoin activity. So anyway, technical analysis may not carry as much weight for that reason. Okay, so good question. Thanks for bringing that one up. Chris from Milan, buongiorno, or buonasera in Italian. That's all I can say. I know some bad words. All right, okay, cool. All right, no problem. All right, glad you're enjoying it. All right, hey, Daryl. Okay, Kai, that's why I mentioned this pair. It's in a neat range. Yeah, those range-bound pairs are decent. If you're a Forex trader, there's some decent opportunities in those range-bound pairs. Though from what I understand, if the dollar and SEC will be okay, all right. So good to know, Kai. But Mean Crowd built itself its own. Yeah. All right. So good. All right. Do I have any other questions? I'm sure I have some here on TradingView. Let's take a look over here. Okay. No, I answered those. All right, people. So I guess people are looking at the time, and I told them I was only going to be at this for an hour. So I have a couple more minutes before I reach an hour. Any other questions before I wrap this thing up? Good questions, everyone. I appreciate everyone's questions. Let's go back to Bitcoin. Any other questions? I hope you found this useful. So again, the point of my stream here is for you to come away with confidence and to be more objective about what you're likely to see. All right. If you find yourself getting carried away, if you find yourself, like someone mentioned, fear of missing out earlier, if you find yourself struggling with that, you have an emotional problem. Okay. I can't help you with that. Human nature is the biggest obstacle that we have to overcome in this game. Human nature is first, our own human nature, okay? First, you have to overcome that. Then you worry about all the industry problems or the industry obstacles that they put in your way to take your money. But if you can't get over your own human nature, you have no chance at all. I mean, the game is hard enough to begin with. I mean, you're playing a random game most of the time to begin with, okay? So you really have to have a good awareness of your own human nature. And that's what that's all about. Okay. Being objective, seeing the market for what the market is saying. Okay. And respecting the market and accepting that the market is mostly random and accepting that price accounts for all the known activity in the world. Forget your news feeds. Forget the garbage on Twitter. Forget all that stuff, because that's you grasping for logic. There's no room for logic here. Logic in this game is just an illusion of control, okay? We have no control. The only thing we control is our risk, okay? So I always tell people, focus on risk. So before you can even do that, you have to have an objective view, all right? What's within reason? What's not within reason? What is the market telling me right now? Okay, so on a chart like this on Bitcoin, the market is telling me that it's in an area where selling activity can develop, but there's no selling activity at the moment. Right now, at this moment, there's nothing for me to do on this time frame. Absolutely nothing. That's being objective. Okay, so I'm not getting caught up with, it's going to rent to 30K. I better buy it because I'm going to miss it. Nonsense. There's absolutely nothing for me here to do. Why can't I buy this? There's too much risk. Why can't I sell this? There's too much risk. So I want the risk to be manageable or within reason, okay? I don't even have confirmation here on either side. So there's nothing for me to do. If I was looking for a long, let's say I was being aggressive, okay? And I wanted to go long. There's still no reason to get long. I don't see an inside bar continuation pattern here. There's nothing here, okay? So by having solid rules like that and having basically a process to go through, I can filter this market information and I can actually extract value from a chart without getting carried away with nonsense, okay? Notice I have no oscillators on my chart, again, because they're useless most of the time. They have some role. It depends on how you use some of them. Okay, I'll give them that. But most of the time, there's absolutely no advantage to using them. Okay. So people are always thinking that, oh, if I put this one and that one and this moving average, it's all random. So if you don't have inside information, you need a way to objectively look at the market that will help you prepare or anticipate for particular scenarios. Our job is to go from countless scenarios to a limited few and say, okay, the market is likely to produce one of these scenarios in this limited few. And then it's up to the market to either conform, or not. And if it does not, you adjust. Okay. The name of the game is adjusting. Okay, 10-year yield. Kai, I answered that by looking at the 10-year futures. The yield is just going to be the inverse, right? So I expect yield to go higher as long as the 10-year note futures look the way they look. Look at the 10-year note futures, okay, which is ZN1 exclamation point. Take a look at that. As long as that thing is going lower, yield should go higher, okay? I mean, that's inverse to bond prices. Okay, you guys, I'm going to wrap this up now. So I think I got most of your questions. I see a couple more here, but I got to go. So if I missed your question, I apologize. Let me just see what they ask. What about getting in? Okay. TLT putting in new lows, yet QQQ is lagging. Okay. Don't take it literally, meaning it's not going to be one-to-one. It takes some time for the bonds to do something, and then eventually the market follows. Just to give you an example, when the bond market was selling off back like a year ago almost, okay? Actually, no, a year ago, the bond market was selling off. The S&P was making new high after new high after new high, and that went on for months. Eventually, the pressure from the bond market started to be felt. So it's not a one-to-one thing. Don't think like that, okay? It takes time. So I look at it from a general sense. If bond market is generally going lower, stock market is probably not going to go very far, much further, or anytime soon. That's the way I look at it, okay? Okay, part of the VIX is okay. Yeah. All right. And also, don't get too caught up in that VIX. That VIX has been acting very strange in recent times. And basically, it's a sign that no one is hedging or no one is buying puts. So that could be a sign that the market hasn't seen a range expansion yet, right? One way or the other, usually bearish. So the market still may actually be complacent, right? Keep that in mind. But don't get too caught up in that. Okay, it's just going to mislead you. All right. So this Japanese yen? No, it's dollar index. Dollar index is the main thing. You know why? Because the dollar is a world reserve currency. Until another currency takes over, the dollar carries the most weight. I didn't make that up. Okay, that's the way it works. Dollar is a world reserve currency. Use the dollar index as a gauge, okay? And that thing looks like it's poised to go higher. All right, everyone, I got to wrap this up. So I want to thank you all for your great questions. Thank you for spending some time with me here today. I hope you all got something out of this. You know where to find me if you have any other questions. If I missed your question, I apologize. Please come back next Monday. I'll be streaming again, and you can ask me a question then, okay? So I want to thank you all for your participation. Enjoy the rest of your day or the rest of your evening, wherever you are in the world. And thank you so much for watching.